tape.
All right. What's up, everyone? We have I don't know what that was by Shauna down below. Joe's already laughing. We got Chris writing emails and sending texts. Jason's ready to rock and in a hurry. And
He's in a hurry.
Ryan Fouts is wondering if it's yesterday, tomorrow, or today. I don't know. So that's going to be our show today, guys. Welcome to Ask Me Anything with the BYOB Money Multipliers. Believe it or not, we know what we're talking about. So put your questions over in the chat box. We're going to get to all of those. We're going to have a fun time today. I don't know, maybe grab a drink if you want. It's happy hour. But with all that being said, play a quick little 14-minute commercial, and we will be right back to do a little around the horn. Cheers, Shauna. All right. Welcome to Ask Me Anything from the BYOB Money Multiplier team. Thanks for being here. Put your questions over in the comments. We're going to answer all of those. And in the meantime, while we're waiting for those to come in, we'll do a quick around the horn. I'm Stephen Nagy. I don't know what my title around here these days is. Maybe Chief Clown Officer. I don't know. I like to have a good time and have some
super
laughs
snaggy
today. So yeah,
super
whatever that might
snaggy.
look like. So super snaggy. Okay, we got the snaggy snacks going on point today. But of course, over next to me is Mr. Chris Naga. What's up, Chris?
What's going on? Hi, everybody. Happy to be here. Happy to answer your questions. Yeah, this is an official happy hour, so bring it on.
Hey, everybody, Brian Fouts here up in Northern Idaho. Just getting ready to remodel our kitchen and getting ready to set up another policy for infinite baking. So I'm pretty excited about that. I think it's going to be next month. We're doing another big one and going to be documenting that journey. It's going to be fun. So with that, I'll pass it on down to Ms. Shauna.
That's awesome. Send me pictures of your kitchen because I feel like that's always like a life achievement to remodel your kitchen. And then I'm drinking the last of my 6-pack that I bought a couple weeks ago, courtesy of Justin Streeper's advice. But yeah, just ready for Money Tank Dallas. Everybody is excited. Everybody keeps asking me about our flights and where we're going and what the plan is. And it seems great. So I'll pass it over to Sipple.
What's all the jibber jabbering? I'm here in Orlando. I'm in a hurry. Let's go. We got lots of questions to answer. Just kidding. Happy to be here as always. Shauna's drinking. Justin, thank you for creating a drinking problem with Miss Shauna. She needs to go out and get more booze now and be a real BYOB team. So now over to my buddy, Mr. Joe K from New York.
So Jason's in a real hurry, so I have to do this really quick. So I'm Joe. I'm here. I'm not drinking today, but we're going to answer all your questions. Okay, talk to you soon.
There is no question.
Well done.
There's no question.
For the end.
I was going to say, I thought I was going crazy. There's no questions.
We did all that.
Do you guys have any questions that we could answer?
I do. I have one question to start with here. So how do you spell the word medieval?
Stop.
I'm serious. How do you spell it?
It's hard.
I'll buy a drink for anybody that can just spell it right now. Go.
MEDIEVAL. MEDIEVAL.
You cheated, dude.
I do Connor's spelling words as we go back and forth every week.
All right, I owe you a drink. That's really good because I've spelt it and I still can't get it right. So that's pretty good.
Medieval.
That's a weird one though, right?
Yeah.
All right.
All right. So should I just go in and start asking some questions from my YouTube channel?
Yeah.
I mean,
do it.
We got Instagram streaming, so until we get some questions coming in, I mean, somebody's asking about what's a 1035, but here, let's see. Well, we can hit that one first, and then let me come back, and I'll find a good. Actually, I'll find a really stupid question that I can ask.
10:35 a.m.
There's some good
10:35 p.m.
There are no stupid questions.
There is no stupid questions. You're right.
I got a statement from somebody on my YouTube video, and this is on the one that this is the right way to buy your next car. This person said, and I just need clarification because maybe I got this all wrong. It is only your cash value, but you can never take that out.
Oh, I wonder what I
know that you can't take your cash value out. The insurance company keeps that forever locked in their vault. You never have access to it.
What have I been using for the last 4 years?
Your imagination.
Medieval anatomy.
This is an exercise of
Maybe I should go get a
imagination.
beer.
I'm trying to find better.
An exercise of imagination, reason, logic, and prophecy. Nowhere in there does it talk about math or cash value. It's just logic, prophecy, imagination, and reason. Let's go.
Yeah, another one said there's no such thing as an honest banker. I said,
Except unless you're the banker.
I said, I'm 100% an honest banker. I never cheat my banking system. And then this person said, what about the customer? To which I replied, I said, listen, I teach it the right way. If you and the customers owned a bank, like a real bank, would you take a loan from your bank? Would you repay your own bank? Would you repay your own bank with interest? The answer is yes, yes, and yes. If you stole from your bank, you'd go out of business, or you would be arrested and thrown out by the board. I know a lot of bankers and even owners of real banks, and they always repay the loans with interest. If asked if they would steal, they would say it's illegal. Why would our customers steal from their private bank knowing it would hurt them, only makes them less money and only hurts their family? Our clients do practice sound banking. And yeah, anyway, I just went on to say, you're not a client. I'll be finished with that. If you disagree with any of what I said, the best part is you would never, ever be a client of mine. I don't help people that can't help themselves.
And for anybody who thinks Chris isn't replying to your YouTube comments.
I am. That's why they're rough. That's why there's typos. If there's ever not a typo, I probably didn't write it.
All right, we did get like 5 questions, though, really good ones.
All right, cool. I was just killing time.
So Family Latin Capital is saying, I want to know if a truck driver paying for his truck's diesel monthly is profitable for his bank when he hasn't even had the policy for a year. They are creating a debt, meaning endless headaches. Or are they?
I'm gonna have to read that one again.
Family Latin Capital was at Think Tank.
Yeah, I was going to say the same thing. We got to meet them. Patty
they
got
do a
to
lot
meet
with
them.
semis. They're creating debt, meaning endless headaches. So let's see. I know I got to kind of read that again too. Want to know if a truck driver paying for his truck's diesel monthly is profitable for his bank. How I'd answer that, and it's kind of how I used to teach Shauna how to use it for her vacation. So a lot of truck drivers, I would assume, use credit cards, and that's what they pay for their diesel. Now, if they're doing it the right way, they're paying their credit card off at just the right time where there's no interest being charged. But that's kind of difficult, especially when they're on the road. If it's their company, if they don't have bookkeepers doing this, a lot of times what happens is those truck drivers that use the credit cards, they don't pay their credit cards off every single month. Therefore, they incur interest on that at a rate of probably north of 20%. So therefore, if they just every month use their policy to pay off their credit card, and then paid their policy back the exact dollar amount they would have made as a monthly payment to their credit card. And if they would have tried to pay off any principal, just paid their bank back the principal plus any interest they would have paid, they get to keep all the money. And now they're being an honest banker. And now they are actually not creating debt. They're creating wealth. Slowly and surely, but they're creating wealth.
I like it. Any other comments on that?
Would they not be getting paid for getting the diesel then too?
Well, they would be, yeah.
See that?
They would.
I like it. Yeah. Emily is saying, what is a 1035 exchange?
Ask Pace Morby.
A like for like exchange.
Definitely need a drink today.
If I always say this, I always ask people first, are you in real estate? Yes. Do you know what 1031 is? Yes. Same thing for life insurance. It's very similar. It just allows you to move the cash value from one policy to another without any tax implications. That's the simplest answer.
Well said.
What is a meanie? If they're an addict of it, I don't even know what a meanie is.
It's just an IRS code. It's just basically, and there's 1031 exchanges, which is in real estate. You can defer the taxes by, kind of moving into a like, property or like kind. Am I saying that right? Anyway, into a like property. This is a 1035 exchange, which allows you to move from life insurance to life insurance and also annuity to annuity without any tax consequences, even if you had gains in the policy.
Can you 1035 more than once too? Like with insurance policies, can you continue?
Yeah, I mean,
yes,
you can, but it's kind of silly if you were hopping from one policy to the next, you need to stop and check yourself. and find out why you're doing it.
I've had a client that had that. It was out. They did it 3 times, but it's because the first time someone did something that was horrible to their policy.
Oh yeah, there's definitely times to 1035, no question about it. I 1035 out of a VUL that I set up at New York Life. It wasn't an IUL because they didn't have IULs back then, but it was a VUL. But they're two pieces of shit carved from the same freaking driftwood. If you
Guess what? I'm 1035 in next month.
Yeah, probably an IUL.
Wasn't that the spawn of Satan?
Well, I mean, that's a bit drastic, but it was a spawn of something.
Yeah,
You guys are in Fuego today. You're in Fuego. For Family Latin Capital, just back to the first question, just because it's on my mind still, and it feels like they said the drivers need to pay the debts of the policy. You know, what we're teaching people is we're changing one thing, right? Where, like, if you make this much and your expenses are here, this savings is where you're going and you're putting into your policy. So if this driver's just putting what he's earning without saving anything and then not having anything additional, then that could very quickly drive him into debt. That's not a good situation. Even though Chris described that you can move the money and make sure you pay it off before you incur any interest and different things. We want to make sure that you're not setting yourself up for failure.
I agree. What I said, Jason, thank you for calling that out. What I said is not a way I would ever use the policy. I was just simply stating like it's a way you could. I don't think it's the most effective way to use it, but
I think what Chris, you were saying is more so if it was you, your truck and your diesel, yes, this person sounds like somebody's inviting them to pay the annual cost of their diesel and not worry, and that the debt can be paid off with just the interest and they live day to day, and he's worried.
Oh, I was thinking if I'm the truck driver and I own the truck and I'm using a credit card to pay for my diesel every month. Yeah, totally.
Yeah, be your own banker.
What the hell are you talking about? You're paying for somebody else's diesel in a truck you don't own in a business you don't own?
No.
Never mind.
Doesn't make any sense to me.
No, it's the agent's telling them, Chris, that he doesn't have to pay back the debt, just pay the interest. And so what Family Latin Capital is advising is, no, you have to pay back the debt, have a plan to pay back your debt. Like if you're out there, like think of it in other ways we teach. If you're out there in an investment where the capital is going to be out to work for 18 months, then just pay the interest because the capital is out doing work and you're making money. Or if you're paying off higher interest loans, and you're putting the money back into the segregated before it moves back into your banking system, then do that. But don't take on a debt and just pay the interest because you want to have money going into an account, right? Like that's what I'm reading, at least. That would be my take.
Yeah, I've had a client with the exact same situation. An agent gave them a policy, said this is your emergency reserve. Whenever you have an emergency, pull the money out and don't pay it back. And that policy was in place for 15 years. And then they heard about infinite banking, realizing that's what they had. And man, their policy is almost upside down now because of that bad advice that other agent gave them. So you got to be very careful with that.
So there's two sides to this. I mean, what Family Latin Capital is saying is correct. I mean, what that agent is telling their client is, legitimately correct. You don't have to pay the loan back to the insurance company. You're only required to pay the interest, but then he finishes with the best thing ever. If he wants his bank to work, he's got to pay the debt 100%. Like, otherwise you're stealing the peas. You're robbing from your bank. You're not being an honest banker. You're literally just servicing the debt. Like how many of you to kind of look at this scenario, like what that agent said would be, an agent or an advisor telling you, hey, listen, rack up your credit card, but just pay the interest. You'll be just fine.
Yeah, it's bad idea.
But isn't it basically the same thing?
Yes.
Yeah.
Yes, that's why I wanted to bring us back to this because I knew that what you were saying was correct, Chris.
You nailed
it. Was a disconnect back to what Family Latin Capital is teaching. And one thing, Family Latin Capital, I'm so excited that you're here. I know you've been communicating with Patty on social media, and you're standing up for, people. They were getting attacked for saying, hey, you can't use IULs for banking. Not to get Chris started. Not to fire you up, brother, but I know that this person is standing for integrity. If you were at the Nelson Nash think tank, if you're teaching this the right way, if you're coming here to ask questions and serve, that's awesome. So keep doing what you're doing.
Family Latin Bank, it's kind of, Stephen always yells at me when I say this, but like all these people that are arguing with us about IULs, working for IBC, like tell them, listen, like meet me in a dark alley. Let's solve this the right way. Fist to fist, headbutt to headbutt, kick to kick. Like, let's stop talking through this stupid computer and let's go solve this problem. Steven doesn't like when I say that.
Wait, we're fighting now? Cool. Where's Gabe?
I thought that's what we were talking about, is fighting about IULs. Like, let's do this the old-fashioned way.
Yeah.
Oh my God. Angela Sherwood is saying, do I have to wait until I get out of debt to start infinite banking?
No.
Happy to hear
Heck
no.
I think everybody wanted to answer that one, so nobody answered it.
Yeah, it's like,
Absolutely not. The infinite banking concept should be used to get out of debt.
yep.
I would say the caveat is, do you have good habits? Like, if you haven't been able to pay yourself, like, we want to do a deeper dive with you and know, like, are you paying more than the minimums on your debts? You know, maybe you're paying your future self, meeting, you know, a qualified plan. Like, are you in the process of saving? If you're not saving yet, like, I had a couple come to me and it's like, hey, we just got our tax returns back. And they literally told me in our conversation, Jason, we're not saving. We've never saved. We've never been saving. The money comes in and just kind of disappears. And then they're like, oh, we're ready to get started. And I was like, no, like, go pay yourself for 3 months and come back. And they're like, no, we prayed on it. We're ready. And I'm like, no, your history shows you as soon as you start, you're going to be back right in the same situation until you break the pattern of being able to pay yourself first. So that would be, yes, you can do it now. You don't have to wait to get out of debt, but you do have to establish the habit of appreciating yourself a little bit more and paying yourself first.
Look at her follow-up comment though.
Yeah. So I had a universal life insurance policy for 17 years. I was not educated and have wasted all this time and money. Can I switch it to a whole life policy?
So you
Would
can.
definitely be out of surrender at that point. 17 years. I mean, we'd have to look at an in-force illustration to make sure you're out of the surrender. But if you are, 100%. That's what I was referencing. Like, I had an IUL policy that I started back, I don't know, 2025, and it fell apart in 2008 when the market crashed. Hint, all you IUL people. But I ended up waiting till the year it got out of surrender. I 1035 exchanged it into a specially designed whole life. So that's definitely what you can do, Angela.
Then yeah, Angela, we can help you look at to see if it has that kind of cash value that you can potentially use to actually help try to get yourself out of debt. I mean, we have the software, have the team that can do that for you. So schedule a call.
I actually, in scrolling through social media, I feel like I saw somebody say, like, my favorite way to build wealth is by paying debts. I don't remember who it was, or through debts or something. So it's the message is definitely getting out there.
Yeah.
Okay, John Bryan is saying, when an insured graduates, what happens to the cash value of the policy? And what he's saying by graduates is what?
Pass on.
Die.
Hopefully go up and down.
Kick in the bucket. Dying. Oh, we're just answering. Okay. I thought we were just answering what
part of
does
it?
Graduate mean? How do you spell graduate, Stephen? Don't look at the screen.
So, I mean, the way I always explain this is that the cash value is part of the death benefit. So the death benefit gets paid out. The cash value is included with that, less any outstanding loans. That's the kind of the 30,000 foot version of it. There's a more technical one, but that's for a separate call.
I hope the cash value is put into opportunities to make you more cash while you were alive. I hope that's where the cash value is.
And if you're asking, John, is the cash value paid out on top of the death benefit? The answer is no. The death benefit is the total amount that the beneficiary is going to receive. It is the tax-free estate. So,
and it's always more than the cash value, except for age 121 in most cases.
Yes.
So cash value is the thing that you get to use while you're here. And then if you were somebody who just got a whole life insurance policy, you never even touched that, it still doesn't, like, your death benefit is your death benefit.
But if I could just add on to that, so this is kind of like a common debate, in the Dave Ramsey space. Dave Ramsey says, your death benefit does not include your cash value. Absolutely correct in saying that. However, your cash value as your cash value grows, especially with the policies we design, which are high cash value, as that cash value goes up, your dividend goes up. As your dividend goes up, you buy more paid up additions. As you buy more paid up additions, your death benefit goes up. So as the cash value is going up, the death benefit's going up. So the death benefit actually does increase due indirectly to the cash value increasing.
And the easy way for all of you mathematic people out there, or math people, that you want to look at this, what Chris just said, if you go out to the last year of a policy, if it's an older one, it'll be 100 years, current ones are 121, and you look, and something really interesting happens in the last year. Your cash value is either equal or a little bit more than your death benefit.
Right. Good.
And so if every year, if the dividend buys more paid up additions, which has to do three things, it buys you more death benefit, it gives you more cash value, and it's going to give you an increase or a chance to increase your dividends. So if your death benefit goes up every time you buy more PUAs, what has to happen in the cash value? It has to continually go up. Right?
Can I say that in a different way?
Isn't that cool? Well, if your death benefit, your cash value equals your death benefit in the last year, and every time your dividend buys a PUA, the death benefit goes up. So if this increases, what has to happen in the cash value? It has to go up.
And you know what I see when you say that whole entire situation is like a house. Like what happens, like here's your house and you have a HELOC out and then you sell your house. What happens to the HELOC? It gets paid off and then you get what's on top, right?
Yep.
And then as you make improvements, like the PUAs is like improving your house, the whole value of your house goes up and so does the equity that you unlock and then you sell it for more. It's like that.
Yes. Well, if the market's going up, like if your house is increasing in value, that's what we're saying, because your death benefit's going up.
And look at what Rob just said, that comment right there. That's the one that I've heard before.
Oh, that's what the laugh was. I'm like, I thought you were laughing because I just told Shauna the same thing. Can you explain that differently? And I just said the same thing again using my hands.
Because this right here is what he just said is wrong. It's purely wrong. Dave Ramsey says the insurance company steals it from you. No, if you go look up the technical version of what cash value is, he is 100% wrong. I'm not going to get into the technical version because there's a whole definition to what it is and how it's calculated. But that is 100% wrong. I hate that.
And let's moving forward, I want to offer to this group. I was interviewing someone the other day and he started referring to Dave Ramsey as Daddy Dave. And I thought that was really funny. So I think we should refer to him from now on as Daddy Dave. Daddy Dave says, whole life is bad. It's bad.
Oh, great grandfather Dave.
I don't want to say his Dave, little Daddy Dave.
I'm not saying it either. All right.
He'd probably like it if you said it, Shauna.
OJ is saying, okay, here's the question I'm thinking about a while. If I were to borrow $100,000 from my HELOC to open an IBC policy and then use it to invest with a return, would I pay back my HELOC only?
Ooh, you want to take that one, Joe?
Yeah, well, all of your money should be going into the HELOC if you're utilizing it as a one-pot system. The policy is an asset from day one. The dividends and interest are going to be given to you because of your deposit. When you borrow the money, you're borrowing it from the insurance company. When you get an investment, that arbitrage is going to be utilized to pay the interest on the HELOC and on the policy. So the asset is the asset of the policy, while the HELOC will always be a liability. The liability you can never change because of the interest. So why don't we combat the interest and the liability and let the asset grow? That's why the money would go to the HELOC. So
yes, the HELOC goes back to the HELOC first, right?
True.
Okay. And then when would I pay back the IBC I took a loan from for the investment?
When the investment comes back, then you can put it back into the policy.
So the way I was
going to fill up the HELOC.
Like if you have an investment that's providing cash flow goes through the HELOC first, then into the policy.
Correct.
Okay. Patricio is saying, do you recommend using the infinite banking system to enter my monthly expenses? If the answer is no, why would that be?
I don't support that. I know in Nelson Nash's book, he basically talks about running 100% of your income through your policy, which if you can get that around the insurance company, please tell me how. But, I brought this up a couple of times at an event we were just recently at. I guess in theory, like after year 10, when your policy is incredibly efficient, you could pay your monthly expenses. But to me, that's just a lazy way to use your policy. I mean, there's so many better ways to make money with the infinite banking concept, with taking back the banking function versus paying your expenses. I say just whatever income you have that is needed to pay your expenses without any debt, like use the policy and the infinite banking concept to expire and pay back all, or to pay off all your debt. And then you're recapturing all that money. So over time, that extra money that you were giving away to your debt expenses now becomes income. Use that extra income to pay your expenses, or just keep the income that you use to pay your basic expenses, rent, groceries, diapers, going out to eat and things. Keep that in a bank, because you're going to spend it down every month. Try to get it as close as you can to how much you put in there. And then anything else, your savings component, runs through your banking system, the policy, and you use it for the infinite banking concept. I just will never, and I've done videos on it, I will never support using the infinite banking concept for paying expenses. Even though a lot of people do talk about that, do suggest that, I just think you're setting people up with way too high of a probability of failure doing that. And it just doesn't, to me, fit the way you can best use this system. I don't know. I mean, I'm sure.
And Chris, to support that, what you just said, also, when Nelson talks about it, he talks about it being 10 to 20 years into someone's journey. Right. That means that someone's been practicing the business of being a banker and have rethought their thinking many, many times to get to the point where they have enough warehouses of wealth that it can accommodate all of their income. It's a much different conversation than, hey, I'm not saving money, but could I use this to pay myself now and pay my expenses from it? Right. Like that's two different worlds, really, two different realities. One, we're not saving, we don't have anything other. We have so much money coming into our system that now we can use it for everything because it can accommodate 100% of our income.
Correct.
Takes a while.
I got a couple questions over here on Instagram, but I don't totally understand them. So let me just address them real quick. AMRUHT with some underscores. What are we talking about? We're talking about anything to do with money and questions people have. A lot of what we're talking about is the infinite banking concept. It's a legitimate question.
It is.
No, it just made me laugh because I was like, what are we talking about? Where are we? Who are
we're all over the place talking about money, but we're just answering people's questions, money related. And primarily it's been infinite banking concepts related. HBG Trader said, where can I have my policy? So I don't understand that. HBG Trader, can you rephrase that question? Are you asking where can you get a policy? Like what entity or where can I hold the policy? Who can be the owner? I don't quite understand what you're asking. And the rest of them, and I guess I'll ask this to the audience because, hey, I guess there's no stupid question, even though there's stupid questions. Flow Tactical said, but why is Israel our greatest ally? Followed up with, and who owns all the banks? I'm not thinking Israel's our greatest ally. So that's first, and then second, who owns all the banks? Boy, who the hell knows? The central banking system, Satan?
They're not private, that's for sure.
No,
I mean, that was one of the things we heard, right? Conspiracy is just a group of people getting together in secret and making decisions, right? And I think conspiracy is a lie, basically, was where it boiled down to. So
I'm reading The Secrets of the Federal Reserve, so that book will pretty much tell you that the Fed pretty much runs all the banks.
Ooh, I actually asked for a book report on that, Chris, and I actually have it somewhere here. I'll have to find it. Yeah. I was like, I don't want to read all that. Tell me about it.
Yes. Jamise is saying, I have a policy to BYOB. My State Farm term life policy is $275,000. It's expiring in 2027. It's time to convert it. What's my best move?
There's a lot of questions about that. We'd have to understand that. Because one is that, I mean, it's with State Farm, but that does not mean that it can be converted to an infinite banking policy because it has to be accepted by that and other insurance company. If it's expiring, it means it's been in place for quite a long time. So it might have gone beyond the convertibility period for those other companies. So we'd have to take a look at it for you to help you understand, is it convertible and does it make sense? Because why do you convert a term to whole life? It's because you're uninsurable or you'd have a hard time qualifying for a new policy. I have a client right now that has that issue, so that we are going to convert. But a lot of clients want to convert, but they don't need to. So a lot of other questions, but that's why we would recommend scheduling a call.
Yeah, the best move probably is if you're still healthy, like if you could qualify for your own policy, just do a new one, let that one expire, do a new one. And the reason I say that is like everything Brian just said, State Farm wouldn't be a company you could use for infinite banking. That just never would work. Secondly, you probably can't just convert that. It's probably past its convertibility period. Even if you can, like you're only going to be able to convert to State Farm, because I very much doubt any of our companies would accept State Farm as a company to convert to, but we could check. So a lot of questions there. And I want to come back to Instagram real quick. Sorry to monopolize that, but HBG Trader said, what company can I start my policy with and who can I contact? So if we could tell them who to contact and give them a link, but there's about 5 different companies and there's not one that's better than the next. It's really just all geared toward 2 things. Number one, what are your needs and goals? For what problem are we going to solve with this? Because some policies can be designed differently than others and they work better for certain problems. So that would be the first thing. And then the second thing would be what state you live in. If you live in New York, it whittles you down to Guardian, Mass Mutual, and Security Mutual. And I would definitely say, those aren't probably the top ones to use. I would say One America and Lafayette Life are probably right now the 2 top ones. Security Mutual is super, super good too. So those would be that, but those are the companies we use. And then we'll put the link in there so you can book a call and kind of talk to you about your needs and goals. Sorry, Sean.
It's okay. Yeah, it's at the bottom of the screen too. So you go to mentors.beyourownbanker.com.
Thank you.
Sorry, I lost. Okay, Tom is saying, thinking of asking employer to match my policy premium 4%.
Heck yeah.
Instead of the 4% I am contributing to the 401k plan. Any experience with this?
I love that thought, Tom. Damn.
Yeah, I love it.
I'm probably the only one that has real life experience. So actually, it's funny that we did do this one time. It was, I don't remember the company that was, but it was a small, closely held company, and exact same scenario happened. The employee did not want money put into his 401k, but he wanted to put the money into a policy. The employer agreed, and what the insurance company had to do is set up a payroll slot, which can be really difficult now. Back then we were able to do it, but now you might not be able to. So it really just comes down to, Tom, asking the employer that you work for if they'd be open to considering this. I don't know why they wouldn't. It's really just, it's an administrative hassle. That's all. Because they got to set up another direct, they got to set up another auto pay. They got to have it come out. They got to allocate that. So really it's just a bookkeeping function. Outside of that, there's really nothing different. The only way that they probably wouldn't is putting that money into the 401k benefits the owner, because it gives them the ability to put more money into the 401k, tax deductible. So I don't know. And at a 4% match, that's because your employer has a safe harbor so that they can put the most amount into the policy or into the 401k. So you got a good case there. Just be nice.
Yeah. He's one of my clients. We were talking about it here a couple of days ago, because I think I sent your policy over, or illustration over yesterday, Tom. Sorry.
It's a legitimate thing to ask. I mean, sure. Yeah.
Especially if it's a smaller employer where you have more of a personal relationship with the people in it. If it's one of the big companies, I mean,
never going to happen.
Not at all. But it's a relationship. This is what that's going to be about a relationship with the company.
And life insurance is one of the few things that an employer can discriminate with. They can offer it to one person and be like, you're cool, you suck, you're cool. And there's not the same rule. 401k, you definitely cannot do that.
No.
All for one and one for, is that how you say it? All for one and one for all?
Or one for none.
Yeah. Jared is saying, if I were to open 2 policies for both of my younger children, age 3 and 9, is the monthly deposit or payments $30 for the 3-year-old and $90 for the 9-year-old?
No, but
no.
I've had a hard time getting. Yeah, it's going to be hard to get it for $30. I've tried a couple of companies. It's very hard to get it for that low of a premium, to be honest. 75 is probably the lowest I got. I think I got 50 one time, but it's when they're young, especially, it's hard to get it really low. But so when I did it last time, I was told this. I'm going to get everybody's feedback here. The premiums can be close to the same, or the death benefit can be close to the same. So they want you to be equal when you are doing policies on kids. They all got to be treated equal, but what does equal mean? So it's the same amount going in or the same death benefit is what I've been told. And I've had it be approved both ways.
Typically, they want the same death benefit. The premiums can vary, but
the underwriting amount's going to be about the same, Brian. It has to be. Like, you can't pick a favorite kid. So like the 3-year-olds is going to be less than the 9-year-olds because they're younger and they've got more time to work just by the equation, right? So, and Jared, I would look at it. I'd rather you think about, what were you intending to use the policies for later on and reverse engineer back to that. And then just where are you saving? What are you doing versus looking at like, hey, the formula is 10 times their age or 20 times age or whatever it is. Really look at why you're doing it. What are you trying to accomplish? And then you can reverse back into that problem to solve.
I just did 5 policies on a family, all kids, and the premiums were all close to the same. Death benefits were all different.
Yeah, it really just comes down to the underwriter looking at it. I mean, they're probably seeing. I think probably what the underwriter would look at there, and I don't know, I'm not an underwriter, and this is just my opinion, but they're probably looking at the consistency. They're saying, all right, none of these kids are being treated differently. Maybe the parents want to save X amount per child, and that results in different death benefits, or they would look at it and say the death benefits are the same. I think it's probably mood point and just kind of consistency across the board. So I agree. I definitely think that would fly almost every time.
So on this note, kind of a side thing, I just had an underwriter ask me why the client was doing a policy on they have 3 adult kids. And they're saying, why are they only doing it on 1 adult kid, not all 3 at the same time? I've never seen that question before. They wanted the parent to treat all the adult kids all over the age of 25 the same. Has anybody ever had that before from an underwriter?
Over 25, you said?
Yeah, they're all adults. Yeah, it was the most weirdest question. I've never seen it before. So, as to Chris's point, it's the underwriter. They're all humans, and they all might ask different questions. So it's kind of different sometimes.
I thought that only applied to under 18.
That's what I thought too. That's why it kind of blew me away a little bit. I was really surprised.
Might be a new underwriter.
Mentioned this awesome place we're going to be. I think it's May 8th and 9th. Where are we going to be May 8th and 9th?
We're going to be
where I'm going.
Texas. And we're excited.
I missed the first 2. I'm not missing this one.
Oh man, Joe's going to be there. Shit's going to get rowdy.
Woohoo!
Yep, we're heading out to Dallas, Texas for the PMC Money Tank event, and that is May 8th and 9th. You got about a little more than 3 days left to get the discounts, and Early Bird 1 and Early Bird 2 are your discount codes. You go to privatemoneyclub.com/money tank, and then just type yourself in the discount codes. That'll knock $300 off the general admission and $600 off the VIP tickets. So I'm hoping we can sell a couple VIP tickets for regular price, $12.97 before they sell out, because otherwise we're losing a bunch of money on those VIP tickets. We came up with these discounts and failed to look at how much it cost per person for the VIP things that we're giving. And when we did the math, it didn't math.
And it's a miracle and God's good graces that we still are in business, because that's what we do all the time at Phillips.
It does.
All good.
AT&T dug some, 5G cables into the neighborhood, and some reason now our other service doesn't work as good. Did you guys notice? I froze and I went away and I came back, and tell you.
I'm trying not to see what happens there, Steven. I'm trying to be like completely surprised.
Somebody had said something about some weird thing happening to a witch during like intermission or something. Is that real? Is it really? Wow. Salem witch hunt kind of thing.
I have no idea what you're talking about.
Okay.
No, but it'll be. We always do something just hilarious, and it feels like a big family reunion. And this family reunion's going to medieval times, so that's just how.
I can't spell medieval times, so
Let me hit
I
a
wanna
question
drink.
here on Instagram. Jay Hines Music said, I was wondering if I can do anything with my work 403B. Basically makes nothing. Surprise, surprise. Can I do a 1035 exchange on that, or do actually have to quit your job? So Jay, there's a couple things. If you're still working for the company with the 403B, that, and I don't know if it's a school, but that's basically a nonprofit, you would more than likely have to do one of two things: leave, okay, and sever ties or sever employment. That would enable you to roll it over. You couldn't do a 1035 exchange of a 403B, but you could do a rollover, qualified rollover, to avoid paying taxes now. You defer the taxes till a later day. Or if you're, and forget about the age, I've noticed that this isn't a hard, fast rule, but normally it's over 50, but just call them up and ask them, is there, and you're going to probably have to write this down, is there an option to do a in-service, which means you're in service, you're still working there, non-hardship, meaning you don't have a hardship, rollover. And if they say yes, well then you could roll it into a self-directed IRA, which is what we covered today in March Money Madness for week 2. We went over exactly that. Sounds like you might have been on that call.
I love it. And shout out to G Lala. They had my IBC application call this morning, so ready.
Fantastic. How would you say that? How would everybody else?
Glala.
G Lala. I don't know.
Glala? I would say Glala.
Okay, thank you.
I could have it wrong. Oh, look at Jay's got the whole deal going. Look at that guitar. If Craig was on, he'd respect it. But Craig's
maybe Jay asked this on Instagram too.
He did. Jay,
Yeah.
Same question.
Yeah. Jay, it's way better to come on to this or any of our lives through YouTube than it is Instagram. Because Instagram, for some reason, StreamYard makes us stream it separately. So like I have to look up here for the questions on Instagram, but all the other questions are down here. It's a bit strange. Thanks for joining.
And Darwin is saying, I'm a new agent looking to get involved with IBC. Do you work with independent agents?
That would be Steven. Cat got your tongue?
Yeah. That's it.
We do work with individual agents, not necessarily if you're brand new to all this. I mean, we do look for more experienced people that practice IBC in their own lives and, kind of have the ability to go out and talk to others about that. But if you feel like that could be a fit or just to kind of learn more, to have kind of goals to work towards, just shoot me an email and I can get you started down that path for sure. And if, if we're not the right fit for you right now, I have some other ideas and suggestions on places maybe you get some experience and what to do ahead of time. So just send me an email, snaggy@chrisnoggle.com works. And we'll take it from there.
I always tell new agents, and I had this discussion earlier with somebody. I always tell if you're brand new and you're just looking to kind of get into an industry and you want training and the best to kind of learn this industry, New York Life with no question has the best training. They put more money into training, to every agent. They put way more than any other company. I think it's probably like double. So if you were brand new looking to get into the industry, not IBC, but New York Life would be a good company for training.
That's a good idea. Another thing you can do, Darwin, I've heard this from a couple of people that are now part of our world. But one guy was like, he reached out to someone and said, hey, I'm really interested. I want to learn this. I'm working as an agent, but I just want to do IBC. I'm practicing it. He's like, oh yeah, just go learn more. And he calls back the next day. He's like, I've watched every one of your videos. And it was over like 200 and some videos. It'd be a lot harder with Chris because I don't know. I think he's over 2,000, right?
No, it's over 1,000.
Over 1,000. But he went and watched literally just straight through tons and tons and tons of videos and came back and like, okay, I'm ready. Now what? Like, go, if you want to do this and you have the passion for it, you'll find a way. Right? Like, I didn't know any of these folks here 2.5 years ago. I didn't know anything about money 4.5 years ago, and just decided, like, this is how I'm going to serve. This is how I'm going to help people. And now I'm standing here, right? So you can do it.
2 more follow-ups to Jay. He was on YouTube, but he was getting buried with all the other chats. So he's hitting us up on both, which is kind of cool. He said, so if I quit, I can roll it over. Yes, if you quit, you definitely can roll it over, but you still cannot exchange it into a policy. A 1035 exchange is from life insurance to life insurance or annuity to annuity. So you'd be going from a qualified retirement plan, 403B, into a policy that would trigger the taxes. So if you went from your 403B into a policy, you would have to pay taxes. And if you're not 50, which it doesn't look like you are, 50 or older, you would have to pay an early withdrawal penalty. And I would not recommend doing that unless you had your CPA review the numbers and make sure that it definitely made financial sense to do so. And then his second question is, thanks for answering my question. Okay. Yeah. Got it.
Okay, sweet. I do want to just say one thing about Darwin's question, though, is one thing I do love about our team is that every person that you talk to on the phone is not an insurance agent that can sell you a life insurance policy. They are somebody who practices IBC in their life.
Right.
That's like it's just from an integrity standpoint. I can't stand somebody who's going to sell you something that doesn't do it themselves. So that's just my 2 cents on that.
Wait a second. So everybody that works with a financial advisor, you should ask them 2 questions.
Yeah,
Can I see your tax return? Are they making more money or less money than you are? Because if they're making less than you, then why are they giving you financial advice? Rule number 1. Rule number 2, are they investing in the same things they're suggesting you recommend in? And if they say yes, prove it. You won't have a financial advisor after that.
That's so sad.
The power of
Reality.
questions.
It's real.
Power of questions.
I had clients ask me that, and I was honest with them. I'm like, I certainly don't make as much as you. I'll just be honest. This is how much I made. I don't know if they did business with me or not. I think maybe they bought a term policy from me.
Jared has a really good question. He's saying, I literally have no clue what it means to pay myself first.
I love that. Thank you for being honest and sharing that. That takes courage. So paying yourself first just means that when you make money, before you pay bills, before you invest the money, before it goes anywhere else, you are making sure you're taking 10%, 20% off the top for yourself first. I had a practical Catholic priest not that long ago. You guys have heard me say this, but maybe Jared hasn't. So he was speaking with us. He was talking about love. He's like, you guys have a love problem. You don't love yourselves enough. A lot of the problems in the world come from not loving ourselves enough, having problems. So if you look at it from the first 2 commandments, it's 1, love God with all your heart, mind, and soul. Okay, that's 1. 2 is love thy neighbor like thyself. The reason America has $1.2 trillion in credit card debt is because we somehow got the order wrong. We go 1, 3, 2. So it's as simple as saying 1's God, 2 is self. So pay ourselves first, Jared. It's what every Chris's favorite book, Richest Man in Babylon.
I was just going to say that.
Right? I could read your mind, man. You were even looking at the camera. I could tell.
That's what Jared needs to do. He needs to read The Richest Man in Babylon.
Yes, do that, and then you'll understand that clearer. But if that's
short read.
Yes. I hope that helps, but I always think of it 1, 2, 3 versus 1 neighbor and then you. So you put yourself or think of the oxygen mask that comes down when the stewardess or steward is telling you in the plane, hey, don't save your kid first, put it on yourself first so you can help the other people. You got to take care of yourself first.
And then another way to look at that, go, Joe.
I have an activity that I do with people when I talk to them on the phone. I say, when your paycheck comes in, it gets direct deposited to your checking account. And then you pay your gas bill, your electric bill, your cable bill. And then you're left with whatever you didn't spend. Paying yourself first means you take the money, you run it through the policy, and then you use that money for whatever you want next. Putting it into an investment, paying down that credit card, paying off that car. But you paid yourself first. Every penny that runs into your policy, you're going to get dividends and interest on until you stop breathing.
Yep. There's actually a whole business on this called Profit First. It's exactly the same concept, by the way, that we're talking about in business, called Profit First. So as much as humanly possible, control your money first before you give that control to somebody else. That's kind of the whole summary of what we're talking about. But
And I think when you start infinite banking too, when you didn't start it yet, it's an afterthought. And then usually around year 1 or 2, it kind of becomes more of your first thought. And so it's just a natural progression as you get into it.
Oh my gosh, I just read some terrible news. Sorry, I was browsing the feed. Shares of iRobot tank 30% after Roomba maker raises doubts about its survival. No. Like,
Wait a minute.
is it because like too many people are using Roombas when they got dogs that poop inside? That's got to be why they're not going to make it.
No, the new ones go around.
They fixed the poop smear
They
problem.
did. I mean, we could. I don't think we can live without our Roomba.
How can that company go out of business?
One of the best things I bought in years.
Oh my gosh. I mean, come on. NVIDIA makes it and Roomba's going to not make it? Come on. We got to get our priorities straight here. All right, next question.
Next question.
Well, Jared kind of came back and he said, so where do I put the money that I pay myself first? Like a checking or savings account? We have the HELOC, using it for velocity banking to pay off mortgage, paycheck, parking, rocks.
Put it in there. Right, Joe?
How about your policy?
Well, yeah, I don't know if Jared has a policy yet.
Well, this is where we're telling him you need to take the money, run it through the policy. Well, in this situation, if you have a HELOC, the money would go to your HELOC. That's your checking account, your savings account, and your investment account. And then you would run the money through the policy. When you run the money through the policy, if you are utilizing the one pot, now you're going to take it out and put it back into your HELOC, acquire up enough of money to put into the investment. Then that investment money would come back into your HELOC. Your paycheck would go into your HELOC. How do you pay your bills, your credit card? You're going to move it into the checking account and pay your bills out of the HELOC. Everything would get paid out of the HELOC. And that is how you would do your velocity banking.
And good job, Jared. You're taking action, man. That's a first step. You are learning, growing, and it's awesome. Way to be on the mat. And Joe, that was really good clicking and popping, brother. Way to be.
For you.
Thank you.
Chris.
All right, we got a lot of questions left, guys.
See
why? This is why I wanted to hurry up. You guys want to talk a lot at the beginning. You want to tell stories, make jokes.
All right, the
Let's go.
Roomba thing was unnecessary. Sorry.
Okay. We're going quick here. All right. So Wesley says, I'm having a problem starting a policy due to health and my whole family. How can I start?
Schedule a call.
And then there's a follow-up question. Like
Or
10
buy a
minutes
policy.
So
I have a
what do you
client
recommend?
buying a policy, by the way. Sorry.
Wait, say that again.
I have a client buying somebody else's policy because they're uninsurable. So that's an option.
That's true. What do you recommend getting a policy if you're told you're not insurable and my children are in debt with collections? I'm all set up and ready, but can't. So you said buy somebody else's?
So a couple things. One, got to get yourself insurable from a financial perspective. That just has to happen because if you're not responsible with your money, you got to be responsible with your bank. So you got to overcome that hurdle right there. And the second option is if you have the capital and the cash flow, you can always buy somebody else's policy that they're willing to sell. So I have a client doing that, but that would be a longer conversation.
Yeah, maybe we should. I mean, not that we want anybody to get rid of their policy, but maybe we should ask, if anybody ever feels like they can't afford it anymore before letting it lapse or something to offshoot it to somebody else. Okay, when you pay your premium, does a portion of the premium go towards the PUA rider and the cash value as well?
Yes.
Simple answer.
Okay. What's the yearly fee and annual yield?
Depends on the policy design. Yearly fee, like the policy service fees, like $50 or $100 a year, plus the cost of insurance, which we wouldn't know unless we designed a policy. And then there's the commission, which, 60 to 90% less than what it normally would be. We wouldn't know how to calculate those things or your annual yield until you got on a call and we were able to design a policy for you. You're putting the cart way ahead. Way ahead of the horse.
I liked how you answered it, Chris. So thank you for being a model of that, because I was thinking, please go read Becoming Your Own Banker, go watch our 90-minute presentation, go educate yourself, because your thinking is more towards an investment than a strategy process to control your money.
Yeah.
And this is not an investment. Why, Chris?
It's guaranteed.
It is
Guaranteed.
guaranteed.
Yep.
Susan saying, where can we get info on how to present a deal on Monday's PMC with Steve? Steven, how can somebody present on Money Club Monday? What's like one stipulation that they have to have that they should be?
Yeah, you you want to be a premier member of Private Money Club and reach out to me and we'll get you scheduled on there. It's a great opportunity to get in front of a lot of lenders. We have close to 100 people on each week that are all actively looking for deals, and it builds the relationship. People get to know you and like you, understand you, all the good stuff. And another great platform for that as well is the 2-hour call we do once a month, which is next Thursday. And then nothing beats being in person. So if you're really serious about borrowing and lending, you definitely want to be in Dallas on May 8th and 9th. But yeah, just reach out to me and we'll get you scheduled for Money Club Monday.
Okay. Yes, and that's for premier members. Okay, I have a couple of policies open with direct recognition companies. Any suggestion on what banks or lenders to use who offer cash value collateral credit lines?
I know this one.
Chris.
Boosie Bank. I just switched. I used to be with Coastal States Bank. I moved it to Boosie Bank. I have been beyond happy with them. Literally, like, it is light years different than the prior bank I used for the CV line of credit, and I couldn't be happier. So Boosie Bank, B-U-S-E-Y.
Chris, you missed out on some insider information on Friday. Devin, actually, you missed out on it too. Most of you did, actually. Devin says that whoever he's using is acting. Okay, don't even, because I love him. I would love to see Gary Busey, and I'm jealous that you guys got to see him in real life. But second, Devin's bank, it lets him use up to the surrender value, which is more than the cash value. So it's actually collateralized up to the surrender value. So he's able to get like 200 between all 19 of his policies. He's unlocked so much more money than what's available for cash value.
That's probably, I'm trying to think of the name. Yeah, I think I know what company that is, but they haven't gotten approved. Steven, you know that company. It's like, maybe it's Inception or something. It's a newer company that's in the space. And yes, they are lending a lot more, but they don't accept most of the life insurance companies.
Okay. Well, I thought that was pretty interesting.
That's a good one. When they do, that'd be another one to put an arrow in the quiver. But I mean, why is Devin holding back?
I don't know. And then what is the minimum investment required to start this? Is anywhere below $10,000 possible?
Not an investment. The minimum premium deposit would be 10 times your age monthly. So if I'm 46, add a zero, that's $460 a month would be my minimum. So whatever your age is, add a zero, that's your minimum monthly.
And for between my policy and my daughter's policy, we started at like $7,500 a year between both, and I'm super happy, and I've been able to do a lot with that. So
did you miss this question up here?
Which one?
From Rob? Dave Ramsey said the insurance company steals from you.
No, we hit that a long time ago, I think.
Oh,
yeah.
I got excited.
That's how we got to that Daddy Dave shit.
Yeah, well, Shauna was saying she wants to call him Daddy Dave.
Here's a cool one real fast. The author of Rich Dad Poor Dad with Robert Kiyosaki with Gary Busey.
There you go.
Cool one, right?
Yeah, I love Gary Busey.
Sharon Stecker is awesome. She's pretty cool.
That was fun though. That was cool to meet that guy there.
Love him. Okay. Last question, I think. Tom is saying, Joe, any thoughts on first lien HELOC with 10-year draw, then line reduced slightly for the remaining 20 years until paid versus zero versus common first lien with 10-year only draw, but slightly lower rate?
Listen, I don't even go to 20 years. In the first 10, when you're drawing on it, you're going to be out of debt. You're going to pay yourself back. You're going to utilize the system. You're going to utilize velocity. And first of all, you're never going to want to pay down the HELOC down to zero because you're going to want to use leverage. Why wouldn't you want to borrow at 8% to make 12 or 15%? So you're going to be utilizing leverage. You're utilizing velocity. We're utilizing arbitrage. It's just more than a 10-year draw on a HELOC. So it's a whole system. And when you put it all into place, you're just going to move from and just keep on getting another one and another one. And the lower rate, it's simple interest. So to be honest with you, there is no really difference between 4% and 8% because it's simple. And especially if you're using as a one-pot system, by putting the money in, there's your velocity. But the first lien HELOC that's who I use out of Tennessee.
Great job.
I love it, everybody. Everybody's super happy, saying, so thrilled to be around this campfire. Jay saying, you guys rock. And don't forget some good
Jay's
music.
awesome. Jay's awesome. Like, if you look at that photo, which you can't really see, kind of reminds me of Davey Kamer, my old team manager for Head. Like, kind of has that look. Super awesome. But he said he was 60 years old, I think he said. So no early withdrawal penalty for him. So lots of options with that retirement account.
Fern has a good question at the end, and might be for all of our clients who are wondering. Is Fern saying, I shared Chris's video with my sister. I'm buying a car. She wants to get her next car that way. How do I get her started? Do I just intro her to my money mentor? Like, is that I think that's a good.
Yeah, if you're happy with your mentor, yeah, for sure. We're all one big team, so it doesn't matter. Yeah. But yeah, if you're happy with working with who you worked with, then that's the path. I mean,
yeah, 100%.
I love it, Fern. Invite everybody onto your infinite banking bus. Like, it's working for you. Go spread the word. That's how we're going to reach and help more people. So,
absolutely.
Did we do it? We made it.
Did we
I think
get it?
so. Did we answer Dylan's question about he's 25 years old?
I might not have even seen that, actually.
That's what Jay was saying. His question kept getting run over.
Okay.
This one. So let's take a 25-year-old me. I have main income, trade options and futures with reasonable money, want to invest in real estate, alternative assets. Don't have a 401k or IRA.
I have a question for you. Are you putting puts on the general indexes right now, like long puts? What are you doing with trading options? I'd like to know.
Also, go to Dallas, dude. Like, we'll
Yeah.
cover all that in Dallas.
Yeah.
And also, like, in Dallas, like, if he's trading options and if he's good at options and futures, like, I don't know if Sodi will be there, but that'd be a heck of a good person for him to talk to.
Yeah.
I've been like itching at, I'm trigger finger right now. Like, I'm waiting for the trend to set, but I'm just like, I can get in and get a long put on SPY or even the NASDAQ right now for a really good premium. Like, should I or should I wait? Do or not to do? That is not the question.
All right. And then finally, before we wrap too, so privatemoneyclub.com/moneytank. You can find more information about Money Tank. And then if you want to book a call with our team to talk about infinite banking, it's mentors.beyourownbanker.com.
Thank you, everybody, for the questions. You guys are awesome. You guys did a good job answering questions. I'm pretty impressed.
So many questions. I didn't even finish my beer.
I mean, I didn't even know what we were doing. I didn't even know
Let's waterfall. We're going to waterfall the rest of these.
Well, and you're in the end.
All right.
Now you come back and spell medieval and shut us down.
All right. I'm just going to shut us down. Thanks for joining us for another episode of Ask Me Anything Happy Hour. Shut down.